The bubble keeps inflating, ladies and gentlemen. Stocks again are off to the races, mainly fueled by more hype in AI, artificial intelligence kind of companies. And this is really fueling the highs that we are seeing. The NASDAQ is now at a 52-week high. And don't be confused. This is a bubble, and probably the biggest bubble that you have seen in your investment lifetime. I think that's safe to say, as the market capitalization values that have been added to stocks like Nvidia and Microsoft and Google and Apple and Amazon pale in comparison to anything else that we have seen before. Now, why is this so important? Well, as we talked about in the last video, these artificial intelligence companies are going to fall, and they're going to fall aggressively. Now, why am I saying this? Well, the breadth in the markets is getting increasingly more narrow, meaning that most of the stocks in the market are actually falling right now. If you have stocks that are not a part of AI, your portfolio has been red day after day after day after day without any let up here. And what this ultimately means is, yeah, these stocks, they're going to come crumbling down. The indexes are going to come crumbling down. And that's going to put a lot of pressure on shorts. Shorts think they have felt the pressure before. It's going to be amplified in a huge way. And if you guys have not seen the last video I put out, definitely go ahead and watch that. Now, I want to get into everything that is happening here on the day with AMC stock, as well as the broad markets and this AI bubble that we're currently seeing. So let's get into it. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. So, ladies and gentlemen, what is happening today is obviously AI companies are off to the races. Now, this is pulling up the NASDAQ. It's pulling up the S&P 500. At the same time, your average NASDAQ and S&P 500 stocks have actually been falling pretty consistently. If you take a look at the market breadth of this market right now, you can see that these charts are completely inverted. The market breadth, this lower blue line, continues to trend downwards, and the markets continue to tread higher. And this just means the market cap is being kind of condensed into these AI kind of companies. The companies that control the weighting in the indexes are getting all of the love. Now, how this works, essentially, if you don't know, I'm not going to spend too much time on this, but you got to pledge collateral for short positions, right? Short positions have unlimited risk. So with unlimited risk, you got to, pledge collateral more or less depending on the risk profile of a security. Well, with AMC, there's a very high risk profile, or any other meme stock. So there is a high requirement for collateral. Now, all is fine when your collateral values are going higher. Maybe you can even pledge less stock. If you had to pledge 1,000 shares of Nvidia before, well, Nvidia's went up 200% almost since the lows. Well, maybe you only have to pledge like 700 shares when it was 1,000. Now, if the value falls of, just use Nvidia as an example, then you're going to have to start to pledge more shares of Nvidia. And that puts a lot of pressure on hedge funds' overall liquidity and whether or not to cover on short positions. That can be a big factor to that decision. Now, what causes this bubble to burst is probably the biggest unknown that there is. Something will cause it to. This is the closest thing to a fact that I can give you. I'm not a financial advisor. I'm not a financial planner. Keep in mind, this could all not be true. Invest at your own discretion. You could win, you could lose. We know the disclaimer here. You know the risk if you invest in the markets, and nothing is guaranteed no matter who says it. But from my perspective here, I mean, while AI is a great thing in the long term, in the short term, to see hundreds of billions, trillions of dollars added to companies' market caps based off of 5, 10 year, 15, 20 year down the line expectations can only last so long. Now, I will tell you guys, the biggest catalyst that we have right now that could derail this market is going to be Fed Jerome Powell tomorrow. Fed Jerome Powell, this is going to be the first time getting any new information from him since we got the last Fed meeting. Now, the last Fed meeting, they were pretty clear that they're not too clear on what they're going to do next, right? They might hike, they might not. It's 50-50. They basically left it up to the data. And if the data supports they should hike, they will. If the data supports they should pause, they will. They also cited the debt ceiling quite a bit in the last FOMC meeting. And it looks like, as of today, McCarthy says that they hope to put a deal to a vote as soon as next week. So this is also helping to fuel some of this optimism that we are seeing today. But what we have seen since the last Fed meeting, quite the opposite, right? There's not a lot to be excited about. A lot of the reports that we have gotten have showed the labor market is remaining strong, including the initial jobless claims number that we've seen today. Things are good. Things are fine. The economy can support these rate hikes, and the risk is doing too little compared to doing too much. And that is what the other Fed speakers have been saying. We have had like 5 to 10 Fed speakers every day this week, and they've all said the same thing, that they would favor hiking again before cutting, and that the economy can withstand it. Some Fed speakers are obviously more hawkish, some are a little bit more dovish, but they're all in line with the main, key points. No rate cuts are coming. Like, that's not even a question. And the second down to Fed Jerome Powell, the second in charge, Fed Williams, he says, hey, we don't even expect to cut rates until at least mid-2024. And the markets are still pricing in rate cuts. And a lot of this AI valuation is based off of lower rates in the future, guys. So that is kind of what is happening here today. Other than that, you're not getting any other significant news. Today was really the slow day. And then obviously tomorrow with Fed Jerome Powell will be the big catalyst. Now, as far as AMC stock, AMC as an individual company is up about 1% today. You're in between that 50 and that 100-day moving average, almost right in the middle. So you're not necessarily bullish, you're not necessarily bearish, you're waiting to see what happens. If you break under that 50-day moving average, $4.80 per share, it showed itself. It's a very good demand level, and a lot of people did come in and buy AMC when you did hit $4.87 per share. But again, that 100-day moving average might serve as a little bit of resistance. And then if you break above this ascending line of resistance, then you're probably going to get an even bigger rally. Now, a lot of people have pointed this out, as well as myself, but GME is going to report earnings between June 2nd and June 8th. That could be a big catalyst to also send AMC stock higher, because GME was profitable last earnings. And if they're profitable again, that's going to show a very strong trend. So I think GME has its own, prospects of seeing a short squeeze or whatnot. But meme stocks doing well, let's just call it, quote unquote, meme stocks, will benefit both of them. If GME rallies, likely AMC will rally as well. A lot of people do point out that AMC tends to have a larger percentage rally than GME. A lot of GME's rallies are like 50 to 100%. A lot of AMC's rallies since the initial rally in January of 2021 are hundreds of percents rallies. These spikes tend to be larger with AMC. So although GME, AMC, they got a lot of similarities, right? And they're probably going to move somewhat, the same or correlated. AMC will likely move bigger on a percentage basis. Now, GME will report earnings, like I said, between June 2nd and June 8th. That's going to be the next big catalyst for the quote-unquote meme stock sector, unless we get some news from the judge and the special mastery. So that is kind of two of the direct catalysts that you need to, keep your eyes on and wait on, essentially. We don't know when those catalysts are going to come, but they will here over the next couple of weeks. Now, big story of the day today is no shocker here. If you take a look at the option activity, guys, Even some of the orders that came in the last 2 minutes of trading yesterday, dude, they're insane. July 21st, $10 put for 3.21 million. Another July 21st, $10 put for 3.2 million. A $13 put expiring today for 8.67 million. Another $13 put expiring today for 8.67 million. These are 11,000 contracts a trade. They are 22,000 contracts a piece. Well, with just this one trade. If you times that by 100, representing each option represents 100 shares of AMC, that is 2.2 million shares of AMC that I would argue someone needed. They needed to oblige for a short position. They needed to, cover their ass in some way or another. Or they were trying to suppress AMC and really push the stock down. Those are kind of the two scenarios that I look at here, because if you're going to gamble $17 million on a one-day AMC option, there is an exterior reason for that. There's an exterior motive, exterior reason, call it what you guys want to call it. But that is very, very atypical. Maybe they're trying to hide some short interest. That's a big possibility as well. Someone out there is feeling the pain. They don't want you to know something. That's the ultimate, I guess, thesis of what comes from that. Now, here today even, so far, you've only been open for trading for like an hour and a half. You're getting a July 21st $10 put worth $4.5 million. A June 16th $10 put worth $7.9 million. These are very unusual options, guys. I really cannot stress this enough. There's something going on under the surface here. Historically with AMC, you have never seen this kind of put activity. Even when the stock was falling from its highest levels, did you see these large of orders? It just didn't happen. It hasn't happened before with AMC. So something is going on. Now, if we take a look at the live short interest, that is sitting at 25.09%, 129.5 million shares that are currently sold short. Cost of our average 110%, cost of our max 135%, cost of our minimum 55.5%. Interactive Brokers has 250,000 shares currently available with a cost to borrow fee of 67.5%. So numbers still looking pretty respectable there. Nonetheless, that's kind of what we got on AMC. Not too much else that is actually happening with the name right now. We're not getting any kind of news or anything. As far as earnings, you had Walmart earnings this morning, a little bit better than expectations. So again, supporting that soft landing narrative, supporting that narrative that the Fed's going to have to stay higher for longer and we're not going to get rate cuts. Eventually, the markets will have to, consolidate there and say, hey, we're not going to get rate cuts. What is an appropriate valuation to put on this market? Now, on another note, I do want to point this out for you guys because I think it is, pretty important. It's the Chinese yuan. So the yuan has an interesting, I guess, phenomenon with itself. When it gets above $7 or drops under $7, and that is 1 American dollar to 7 Chinese yuan. Once it goes above or under $7, you tend to get some very weird moves, okay? And it tends to be on the upside a real time of panic. So look back here in 2018, the yuan hit almost $7, almost right on $7. You had the crash in late 2018, in December of 2018. The yuan fell quite a bit. It started to go higher again throughout 2019, and then it peaked out at what? The next crash when the Fed cut rates. It fell, went back under 7, started to rise again, and COVID hit, right? March, April, May of 2020. And if you look directly on when the COVID crash actually kind of happened, even before in January, it started to strengthen, came down right before the crash, and then shot way up after the crash, from $6.92 all the way up to $7.15 when the markets were crashing. Everyone found out things were fine. COVID's going to be here, but we're going to get stimulus and it's a great time to invest, blah, blah, blah. The story we have heard over the last couple of years. And hey, the Chinese yuan just sank, right? And it continued to sink until April of 2022. It started to go higher. Peaked out a little bit, came down around June 2022, went higher. And then it peaked out in October when the markets hit its low. When the markets hit that low of, I believe, like 363 or 358, around there on the S&P 500, it spiked up again. Things kind of relaxed, bullish, bull markets back. The markets just virtually went straight up since then, right? Or kind of NASDAQ has went straight up since then, I should say. You fell back down, and this was kind of the banking crisis in March. You came back down, and now you're shooting back up again. So this is kind of showing you something is not right under the surface. Ladies and gentlemen, that is going to do it here in this video. Watch for the bubble to be bursting and watch for signs that this bubble is about to burst, because I think it's not only a great opportunity for AMC and kind of squeezing capital and collateral out of this market, but also with those actual names, there's going to be an epic implosion of these names. Personally, I think this implosion could start after NVIDIA earnings coming next week on May 24th, guys. So that is going to do it here in this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.